Dear students, in our previous videos, we have seen about the payback analysis and depreciation and various types of the depreciations. So now in this video, we want to see about the taxes and tax credits. So first, what is a tax? So tax is a compulsory contribution to state revenue levied by the government on workers' income and business profits are added to the cost of some goods, services and transactions is termed as tax. So what is meant by tax means a contribution to the state revenue levied by the government on which persons workers incomes and business profits and some cost of some goods and the services and the transactions. So a fee charged or levied by a government on a product or income or activity is called tax. So we have two types of taxes. What are those two types of taxes? Direct tax and indirect tax. So, if tax is levied directly on personal or corporate income, then it is a direct tax. That means if you pay the tax because of your income, so suppose if you are getting 1 lakh per annum, so definitely you must be a taxpayer. So, for your income only, you can pay the tax. So, the tax is called direct tax. And if tax is levied on the price of a good or service, then it is called an indirect tax. That means, suppose if you bought a marigold biscuit packet, so on that biscuit packet, all the taxes are included, and we pay a little bit amount to the for the tax purpose also. So that is you are not paying that tax directly. So that is a just we bought that biscuit or equipment, but that equipment itself assigned some tax. So that is called as the indirect tax. Indirect tax. And a tax is a financial charge. Tax imposed upon a taxpayer by a state or the functional equivalent of a state to fund various public expenditures. To whom the tax will be paid means the tax will be paid to the either government or a functional equivalent of the state to fund various public expenditures. So a failure to pay is usually punishable by law. So if you failure to pay the taxes, then definitely you will be punishable by the government. So taxes are also imposed by many administrative divisions. Taxes are also imposed by many administrative divisions. So the purpose of taxation is to finance government expenditures. So for government also we have some expenditures. So for that expenditures, the tax will be put to the various peoples. So one of the most important uses of the taxes is to finance the public goods and services such as street lighting and street cleaning like that. And why tax? Tax deductible expenses such as maintenance, energy and operating cost, insurance and property taxes reduce the income subjected to taxes. So some tax deductible expenses also there. So operating cost, insurance and property taxes reduce the income subject to the taxes. So for tax calculating, equation for finding the tax saving. So we have one formula, that is annual saving is equal to 1 minus I into E plus I into D, where AS is the annual saving and E is the yearly annual energy saving and D is the annual depreciation rate and I is the income. And next, tax credit. What is meant by tax credit means a tax credit is a tax incentive which allows certain taxpayers to subtract the amount of the credit from the total they liable the state. So it is a incentive which allows the taxpayer to subtract the amount of the credit from the total amount the liable the state. And tax credit encourages the capital investments and encourage behaviors like investment, and the tax credit lowers the income tax and increases the investment merits. So a credit directly reduces the tax bills, and unlike tax deductions and tax exemptions which indirectly reduces the tax bills by reducing the size of the base. So most of the tax credits are non-refundable tax credits, meaning that they can only be used to the point at which no more taxes are owed. And some taxes are refundable tax credits, meaning if the credit exceeds the amount of the taxes owed and the excess is given to the taxpayer itself. So this is the concept of the taxes and tax credits. And in the next video, we will see about the some numerical problems regarding the depreciation. Thank you.